All right, I believe we are live. What's going on, everybody? I'm excited to have you guys here today. Let me know if my audio's coming through crystal clear. Give me a yes in the chat. I got it up on my phone as well too, so I want to hear from you guys, so I know that this is working. Hope you guys are doing well. We got a big day, massive day today. So drop a hashtag. It's paid in the chat. If you guys saw the main presentation yesterday from Ryan, he absolutely crushed it. If you feel like this 3-day challenge has already been worth it for you, if you guys have gotten massive value, I want to see it's paid in the chat right now. So let me know. I'm going to pull up the live chat real quick, see if this is working for me, and we can get into everything. All right, so let me see here. I think it's coming through crystal clear. All right, cool. So let me know if you guys can see my screen as well too. I just want to welcome every single one of you guys from around the world. Let everyone know where you're calling in from. It's cool to see everyone in different states, different countries, you name it. So here's what we're going to be diving into. First and foremost is the disclaimer. As always, you guys know you're very intelligent. Screenshot this. I don't have to insult your intelligence. Crypto is very risky. Everything that we provide is purely for educational, informational purposes only. And while our results are documented, they're real, they're not a guarantee that you're going to produce the same results, because every single person that comes here has a different, goal. They have a different portfolio balance. Some people are starting with their first $100. Some people have tens of millions to hundreds of millions of dollars, and they're looking to put their crypto to work for them. So don't compare your level 1 to someone else's level Michael Saylor here. Start with where you're at and continue to grow over time. When we got into the crypto industry back in 2016, we virtually started small, started with nothing, and we built up over time and kept stacking and kept growing and kept applying these strategies to get results. And so, we never recommend you guys to buy or sell anything. We're just going to provide you with the information. What you choose to do is up to you. And if you lose money, you're a full-grown adult. Many of you are older than me on this call, so you can take responsibility for your own investment decisions. And at the end of today's session, for those of you who are serious about implementing these strategies that we're going to break down for you today properly, who want the same level of, hand-holding and personalized guidance that our previous clients got from us before, years prior to this and previous bull runs, that we're going to be offering an opportunity to work with our team in a more supportive environment, where we're going to walk you guys through educational frameworks, tools, proven strategies to help you apply what's best fit for your goals, rather than just a generic approach at your own comfort level, your own learning pace. So if you guys are excited to see that, then just type a yes in the chat, type a it's paid. All right, cool. All right, seeing you guys' comments come in. Awesome. So there's going to be more on that later. So right now, we're going to dive into the value and focus on giving you the foundation that's helped thousands start earning passive yield safely in the crypto market. Because even without the VIP sessions, you guys are still going to walk away knowing exactly how to put your crypto to work for you today by the end of the call. So stick around to the end if that's something that there's an even slight chance that you might be interested in for, a more personalized experience for yourself, for your portfolio, for your goals. And yesterday, we laid the groundwork, guys. Ryan dove into the fundamentals for you, and it was important to understand that, because like he said, we have people of all experience levels here. Many people understand a lot about DeFi, but there's also people who have never heard anything about a liquidity pool. They don't know what yield farming is. They don't know what APY even means. They don't understand yield. So before we dive into the technical stuff, let me remind you of how these 3 days are going to go, because day number 1 is done. We're on day number 2 right now. And day number 1, we discovered, why holding a loan is leaving money on the table for you. And you're learning a different way to build wealth from your crypto portfolio right now. So day number 2, which is today, your first position, okay? You're going to get your crypto earning actual yield by the end of today. That's the goal here. If you guys haven't yet already started earning yield on your idle crypto that's just been collecting dust. And then day number 3 is all about bulletproof protection. Okay. Tomorrow, we're going to make sure that you keep what you earn and avoid the traps that 99% of investors fall into, and the mistakes that we've made that we can help you overcome to compress timeframes. Because what took us nearly 10 years of trial and error and success and failures, we want to compress down into, obviously we can't do it in just a few short days, but by the end of the call, you guys are going to see how you can be able to compress those 10 years into a few months, a year, 2 years. I don't see it taking much longer than that for you to truly understand things, depending on your willingness to learn and your willingness to accept change. For those of you guys that were in Vegas in person, when I talked about your teachability index, it's super important to be willing to accept change. And by Tuesday, you'll have real money working for you safely and passively. And so today is where we destroy the biggest lie that's keeping you guys on the sidelines right now. For those of you that are just in learn and listen mode, you're not in actual apply, practice, do mode to become, unconsciously competent. You're still in that, conscious competent stage. A lot of you guys are practicing this daily, but you're still, needing to understand some key things to really make it work for you in a more applicable way. And maybe, what's keeping you on the sidelines right now is thoughts like, well, DeFi is too complex for guys like me. I'm completely lost. I don't understand it because, it might be early in the morning for you and, your brain might not be firing off to fully understand everything that happens to me. I mean, it's 4 a.m. right now. So out here in Dubai. And so I still got to wake up, I got to get my caffeine, get a little coffee, and then, I'll start waking up. And so my brain will start to fully understand things throughout my day. So just understand you don't need to know everything. You don't got to be perfect to get started with this. And if you're thinking DeFi is too complex for, guys like you or gals like you, that's complete BS, guys. You're going to figure out how to buy, you figured out how to buy crypto in the first place, right? You figured out how to create an exchange for yourself. You figured out how to create your, your hot wallet. Many of you guys have cold storage wallets. If you didn't, watch the replay from yesterday. So you survived 2018 if you've been around for multiple bull runs, and you're still here after multiple bear markets as well too. You're not a crypto noob. You're just cautious. And that's exactly why he'll succeed at this, because it's good to be skeptical. It's good to be cautious, but never closed-minded, because the guys who get, reckless in the space and they just, start gambling with the money, they're the ones who get liquidated quickly. And today we're going to go from this sounds risky to why wasn't I doing this already? And for those of you that were here on yesterday's call where Ryan broke down these concepts, I want to see an it's paid in the chat below if you got value and if you guys are excited for him to dive even deeper with you today. Because, I've known Ryan for years. 2021, for those of you guys that are brand new and this is your first call, if you didn't watch day one, Ryan and I met at an event out in California, and he was building his crypto company where he was helping thousands of people from around the world basically protect their portfolio, understand about DeFi, and Yoni as well too, who you guys are going to hear from in day 3. Our chief research officer over at Altcoin Pro. Together, they completely transformed my mindset about DeFi to really understand it, because you guys know that I'm like an XRP guy. I'm a big believer in the ISO standard projects, and I just didn't really understand a lot about DeFi. And after learning from them and applying what they teach, it's helped me transform my portfolio to have a more well-rounded and diversified approach, because a lot of people, they put all their eggs in one basket, and that basket can do well, and it also can underperform compared to the rest of the market. So diversification is the key to preservation. So with that being said, I want to have Ryan come out here with you guys today and dive even deeper, and just grab your notebook, get ready to take some notes, go into a quiet location, set aside, all distractions. If you got your kids, hide your kids, hide your wives, hide your husbands, hide anyone that's, distracting you right now. Go into a quiet location, focus with us here over the next hour. I don't know how long this call is going to go. It might go an hour or 2 hours. We'll see. We're just going to provide as much value as possible. So with that being said, I appreciate you guys for hopping on tonight or in the morning if you're out here in the Middle East with me as well too. So Ryan, with that being said, stage is yours.
What is going on, everybody? I appreciate time with us here today. I know that I don't take it lightly. I understand that you guys could really do absolutely anything with your time, and you choose to spend it here with us at 8 p.m., whatever time it is where you're at in the world. It doesn't matter. It's like you could do anything with that time. It's the one asset that you can't get back. It's your non-refundable minutes, and you choose to spend it here with us. And I promise not to take that for granted. Okay, cool. And a big shout out to Nick. Stay up till 4 a.m., 5 a.m. over in Dubai like an absolute wizard. So we appreciate you, man. I know everybody here in the Bull Runners community just absolutely loves you. And thank you for really setting the stage and setting the foundation for us to really be able to take over with Altcoin Pro and help a ton of people. Okay, cool. All right. Well, I want to go ahead and dive into things with you guys now. All right. So yesterday, you guys understood why your crypto should be working for you. Now, today, you're actually going to learn exactly how to make that happen and like why that's able to happen. And I want to start with something important. A lot of you guys have been asking about risks, about what could go wrong, about whether this is actually safe, or, anything like that. And I completely understand what you're saying. And honestly, I'm really glad that you've been asking, because it shows that you're actually caring and you're understanding that. Yoni said it on the Yoni said this on the VIP roundtable session. He said, if you don't know where the yield is coming from, you are the yield. And if you guys missed that roundtable session, oh my gosh, Yoni was just blowing everybody's minds away. You guys didn't get to hear from Yoni at all yesterday, really. He's really only been on the roundtable sessions, but he's our chief research officer. And I promise, if you think I know what I'm doing, just wait till you hear this guy talk. It's absolutely insane. If you were in the VIP roundtable session, you got some value from Yoni today, go ahead and put a 1 in the chat. I want to see some 1s in there. Cool. All right. So, and to be honest with you guys, if you don't ask the right questions, and if you don't learn how to navigate the DeFi world appropriately, you're going to get wrecked. It's the people that don't ask the questions to get the clarity to move forward with confidence that end up getting burned. Okay. All right. So if you want to follow along and actually start earning today, here's what you're going to need. You're going to need a hot wallet ready to go with some funds that are ready to be deployed. You don't need a ton of money to test this stuff out, guys. You could do this for like $100 if you really want to. Okay. Now, are you going to make a lot of money off of $100? Probably not. Right. So, but we also like suggest in the program, I guess we don't suggest anything, but we provide as an example in the program that you can start with something as little as like $100 just to get your feet wet and get used to actually performing the actions before you actually move in with the intention to deploy capital and make money from it, right? Because there's 2 steps to any process. There's learning and then there's making money, right? So just like with trading, you might start off with paper trading and then you move over towards trading real money, right? Crypto with DeFi, it's no different. Maybe you get comfortable with bridging or like, you know, using a decentralized exchange for swaps or liquidity providing for with as little as like, you know, $50 to $100, just so you can know how the smart contract systems work and all that. And then you can scale up to like larger amounts that are actually going to earn you some real money. Okay. But then you're also going to need some focus, right? About 60 minutes of focus time. You know, what Nick was saying, hide your kids, hide your wife, so there's no distractions. If you got a cat that's trying to jump on your keyboard like I do, he's somewhere else right now, so he doesn't do that. Then just make sure that you clear all of those distractions away so that you can be fully focused, okay? And then 4, you need to understand that we're not just building income streams. We're not gambling here. We're not just chasing low cap coins on pump.fun. We're not doing anything like that. We're actually having strategic positioning into these different DeFi liquid, like yield farming positions that are transforming the whole financial world as we know it, right? Never before has it been possible to be able to like have an exchange of money without a centralized intermediary at play. Like I need you guys to like see what's actually happening here right in front of us. And like, you're on the ground floor of it. This technology, this yield farming opportunity that comes from liquidity pools and the concentrated liquidity, automated market makers, fancy words there that don't really matter. But this technology is completely revolutionizing the financial world as we know it. That's why you're able to become a market maker without needing to be an institutional investor. You could just be Rick from yoga class. You could just be a guy that works at Target. It doesn't matter who you are. You can now be a market maker, and that opportunity to earn passive income was previously only available to the ultra wealthy. Okay. Now, what are you going to walk away with? All right. So yesterday you understood how liquidity providing really works. You saw that if you want to earn yield, you first have to put your money into a liquidity pool so traders can swap back and forth between the coins in that pool. And then every trade pays you as the liquidity provider. This is how you become the bank, essentially. And to do that, you need to pick the right protocols and pairs, because that's where your money sits quietly working. Okay. Which is why today we're going to go through 3 things. First, we'll break down the money mechanics step by step so you know exactly what happens when you provide liquidity, where your money goes, how you earn fees, why you're not the yield yourself, right? You are earning the yield by providing a service, right? And guys, it's way simpler than you think, all right? Now, second, we'll answer the big question. What kind of risk is actually involved? And more importantly, how do we minimize those risks by picking safer pairs, watching things like volume, TVL, and avoiding obvious traps, okay? TVL, for those that aren't aware, that is total value locked. I know we went over that in the last class, but when you got new jargon coming in and like you see these, TVL and blah, 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 all these different like letters that are being slung around like crazy, it can kind of be easy to lose track of it. So TVL is total value locked. It is the total amount of money that's in a liquidity pool or in a blockchain. Just think of it as total amount of money in something. Okay. And then third, we'll introduce you to a concept in liquidity providing called impermanent loss, which I know we talked about that a little bit yesterday too, but we're going to go more in detail with that. And honestly, it's a piece that most people get wrong, and a question that a lot of you guys had on day one. So you'll see what it is in plain terms, how to minimize it, and in some cases, and this is very interesting, how you can actually utilize impermanent loss to your advantage to build your portfolio over time. And by the end of tonight, you'll know exactly how to set up your first liquidity pool position. Okay, so here's a quick recap on how liquidity pools work. Okay, you provide liquidity, traders swap with that liquidity, you earn fees on each trade. This is it. That's how it works. That's just simple. 1, 2, 3. You provide liquidity, people trade with it, you earn money. That's it. Okay. You put money in a pool, other people trade, they place trades, you get fees from those trades. Okay. Like I've said, you're providing a service, and typically the only people that could provide this service in the past were institutional investors, large banks that are working with exchanges to be market makers. Now, because of DeFi, because of crypto, because of blockchain technology, you guys are actually able to become market makers yourself. You could do it with $5, right? Not going to get very far with it, but you could. So how do you actually get started in DeFi? Well, it's like the difference between your money in the bank versus cash in your own safe. Okay. So to elaborate on this a little bit further, I dove into this in the roundtable session, right? So there's really two places that you can hold your cryptocurrency. They can be held on a centralized exchange, which is kind of like putting cash in a bank, right? Or you could hold your crypto on your own sovereignly owned wallet that you have complete control over, that nobody else has any rights to do anything with that wallet. Okay. That's what many people will call like a hot or like a cold wallet or a non-custodial wallet. Think like Phantom, MetaMask, Ledger, Trezor. I'm sure you guys have all heard of these, right? This is more like storing cash in your personal safe, right? A safe where only you know how to get access to it. You hold the keys to your crypto, so you have the control. If you hold money with a centralized exchange, and I've said this so many times, I say it all the time, just need to drill it in everybody's head. If you give money to a centralized exchange, they hold the keys. They hold the seed phrase. They hold the private keys to your crypto. So they have the control. They get to determine where that crypto goes and where it doesn't go, not you. Okay. Now you have the rights to that crypto so that you can move it and you can withdraw it and you can trade it. You have the rights to do that. But ultimately, if Coinbase or Binance or any of these centralized exchanges decide, hey, you know what? We're going to freeze everything right now so people can't trade. That could be because they have to have an update that's going on in the system that is strategically during a flash crash. I've seen that happen even on Coinbase. And I hate to say that because I love Coinbase because they're doing a lot for the crypto world with their marketing and their, I guess, lobbying, I guess you could say. But even Coinbase has done that where they've paused withdrawals for a period of time due to, unforeseen things or like updates or whatever. It's like, that's not a very comfortable feeling to know that I can't sell my crypto whenever I want, right? Or on the other end of the extreme, there's FTX, where they just completely took everybody's money and ran away with $6 billion. That's not a good place to be in either if you're the person that's on the receiving end of that, bad thing that took place. because then you don't have your money anymore. And we like to have the money that we worked hard to have. Okay. Now, something that's important to understand, though, if you are going to get into the space of sovereign ownership of your own crypto, is that it is more responsibility on your plate, right? Sovereign ownership means sovereign responsibility. If you're going to hold your crypto sovereignly, you can't call Chase customer support helpline and say, hey, I don't know what my seed phrase is. They're going to say, hey, we don't even agree that you should do crypto because it's going against us and it creates less of a forced reliance on banks. So we can't help you. That's actually why Chase doesn't like it, but I digress. Cool. So if you don't control the keys, you don't really own the crypto. Okay. All right. So you move your coins from the exchange into your hot wallet. That's like putting cash from the bank into your own safe. Like I was saying, this wallet lets you connect to DeFi, start earning fees, and stay in charge. You still decide what happens. No one else does. Okay. So I'm going to be going over a demo here in a little bit, just so that you guys can see that again. I'm going to kind of a similar thing to what I did previously yesterday, but I'm going to do it with two different coins. Well, I guess really one other different coin. It's going to be with Solana, and then more of like a higher risk blue chip. You guys have probably heard of Fartcoin. Put Fartcoin in the chat if you've heard of Fartcoin. I hate saying it because it just sounds ridiculous, but it's like actually one of the coins that's been making people the most money. Interesting place we've gotten to with crypto, but you can't argue with where the market decides to go. So yeah, we'll be diving into that a little bit too. All right. But moving your funds is very simple. I went over it yesterday, so I'm not going to dive into that section here as well. I did that in the VIP roundtable session, but I'll show you guys how to move into liquidity pools again. Okay. Now, here are the main decentralized exchange liquidity pool systems, liquidity protocols that we utilize, actually. So you might want to write these down, okay? Because our team had to do research to figure out which ones were the best and why. So three of our favorites are Uniswap, Orca, and Aerodrome, okay? Now, keep in mind, all three of these are on a different blockchain. This is with intention, because not every cryptocurrency is on every blockchain, right? So for example, if I want to put Solana to work for me, I can't bring my Solana over to Aerodrome that I'm aware of. There might be like a bridged version of Solana for Aerodrome. That'd be a Yoni question. But there's certain coins that you're not going to be able to put into yield farming pools on certain blockchains. Like somebody asked in the VIP session, can I put XRP and XLM in a pool together? And unfortunately, the answer to that is no right now, because XLM is not on, it's not built on the same blockchain as XRP. So you wouldn't be able to put those in a liquidity pool together because there'd be no smart contract that could govern such a pool, because the coins aren't there, right? If you want to try to put a good example that I always coach on is, if trying to put a coin on a blockchain that it's not built on is like trying to put a Nintendo game in a PlayStation, right? It's like trying to put Bitcoin on the Ethereum blockchain. It doesn't compute. It doesn't work, right? That's why we have CB Bitcoin, CB BTC, or WBTC, wrapped versions of it where we've taken Bitcoin and we've turned it into an ERC20, which is an Ethereum-based token, so that you can use it on that protocol, okay? So between these three here, like they've got some serious numbers that make them very impressive, which is why we use them, right? Uniswap alone has processed over $1.5 trillion in trades. I'm saying this to make sure you guys are aware that these are not just some sketchy websites that we're using to profit from. These are time-tested systems that have proven their worth. Orca has over $220 million in total value locked on it right now. Aerodrome has over $560 million in total value locked right now. Aerodrome is the number one decentralized exchange on the Base ecosystem. Base is a layer 2 blockchain, and what that means is it's built on top of another blockchain. So Ethereum is a layer 1 blockchain. Base was built on top of that to have faster transaction speed times but still have the transaction settle on Ethereum for security reasons. And Aerodrome is the #1 decentralized exchange on Base. Base was created by Coinbase. So it's a pretty good one to be utilizing because it's getting a lot of inflows. Okay. Now, this is the thing that honestly I see as one of the most important aspects of these decentralized exchanges. They're all open source code. Can I get like a 1 in the chat if you guys know what open source code is? If you don't, I'm going to explain it either way, but I'm just curious to know how many people know what open source code actually is. We got 1, Bill Weeks. Oh, okay. There they go. We got a delay. Okay. Tons of ones. All right. You guys. All right. I'm going to leave. You guys already know this stuff. No, I'm just kidding. Let me go back. So open source code is awesome. It's the future of the internet, I believe. And one of the reasons for that is, let me explain it before I go into the reasons. So open source code is, so let me go into an example. That would probably be a better way to explain it. So right now we've had problems with Instagram and Facebook and various social media sites to where, remember when there was a system that like a problem that took place with Facebook where it was with like voter fraud or something, where they were like convincing people to do certain things, or maybe they're like, what was it called? Somebody put in the comments if you know what this is. It was like where they were like giving data to specific presidential candidate like campaigns to like influence the direction of the campaign and the election. And Cambridge Analytica, that's what it was. But basically what happened was they got caught doing that to influence the election. Well, if Facebook's code was completely wide open, if it was open source code, then what that would mean is that we could go into the code and read every single line of the code that was created in order to create the Facebook application. So we'd be able to see, well, when it gets our data, what do they do with it? It would allow us to be able to see that, but it would also allow people to copy all of the code and paste it into their own application to create their own variation of Facebook. So then somebody could spin up a competitor just like that. And then if they wanted to take traffic over there and start to do something else with it, they could. That's what open source code is, right? So if somebody wanted to go and take the code for Orca or Uniswap or Aerodrome, then they could go grab the code, copy it, and paste it and create their own app that looks almost identical. Now they'd be missing the liquidity. They'd have to find a way to get people to give them liquidity so that people can actually use those decentralized exchanges. But I wanted to bring this up because what this open source code does is it creates a level of trust within the overall like crypto ecosystem that you're not seeing in like day-to-day like companies right now, right? How much trust would we have in Instagram if they're like, yeah, no, I mean, we're not taking your data and here's the code to our protocol, to our app, so you can see we're not doing anything with your data. You don't just have to trust us anymore. You can verify by looking at the code in our back end, and you can see in that code that we're doing nothing sketchy with the data that we're receiving from your account. Oh, wow. That might actually, yeah, okay. I would definitely start to trust Instagram a little bit more. That's exactly what's happening with this, with the crypto ecosystem and these DeFi protocols. They're open source code that people way smarter than me are going in and auditing and then giving reports on to tell people like you and I how safe they are to utilize. And it also, the open source code makes so this space moves a lot faster because it creates a collaborative ecosystem of developers because they're like, well, Orca did something really cool here. Let's just do that on our protocol. And then we don't have to try to build it from the ground up. Cool. All right, guys. So like I was saying, you keep the keys, you control the terms, you can remove it anytime, you earn when it's used, you can exit your position anytime. Your crypto is still yours. It's kind of like an Airbnb, right? The DEX protocol, the decentralized exchange, they bring the customers, right? basically the liquidity, they bring the trades, they bring the customers, and all you have to do is provide the assets, just like Airbnb. Airbnb brings the customers, you provide the house. These decentralized exchange protocols, they bring the traders, you bring the liquidity, the money for them to trade with, and then you earn off of the fees. Okay. Now we're going to zoom in a little bit more on these decentralized exchanges and the liquidity pools. I'm going to give you guys a little bit more of a breakdown of how this works. Okay. So within each of these decentralized exchange protocols, I want you to imagine like this big bubble over here. I want you to imagine that is like Uniswap or like, you know, Orca. Orca is that's what I wrote here. So that's Orca, right? This whole big bubble, right? And then within this bubble are a bunch of liquidity pools. One of them might hold, you know, USDT and USDC. They're all, for the most part, in decentralized exchanges, like two-sided liquidity pools, which means they hold two tokens in them, so that when you swap for one, you get the other. And I'll show that on the next slide. You know, some of these pools are Jupe and Sol. Some of them are Sol USDC. You get the point. There's a ton of different variations of two token pools that are going to be inside of the protocols. Okay. Now let's zoom in on one of these pools. Okay. Sol USDC. So in this example, let's say that we have Sol USDC right here. This is what a liquidity pool is like, right? It's like there's a ton of Solana in it, and there's a ton of USDC that's inside of this liquidity pool. That's literally how it works. Okay. It's as simple as that. And then we have liquidity provider Bob over here. Doesn't he look just so happy? He's happy. He's still got 2 hairs left. He's like looking at the bright side of life. He's loving it. And, and he's going to put in Solana and USDC into this liquidity pool. Why is he doing that? Because he can earn fees from people like Trader Susan coming in, wanting to swap their Solana for USDC or vice versa. So Trader Susan, she puts Solana into the pool and receives the amount in dollar value of USDC back in return. When she does that, Bob gets paid. It's as simple as that. Everybody talks about yield farming and liquidity providing, and it sounds like this like unicorn that makes no sense. And it's like this mythological creature. But guys, this is really all it is. There's just funds put in a pool by the liquidity providers. And then people like Trader Susan trade one coin for another. And then Bob gets paid. That's it. Okay. Now, here are some lower risk beginner pools, and I'm not bringing these up just so that you can like get into them right away, because knowing if you should get into a pool is very dependent on one, your goals, your risk time. I mean, like your risk tolerance, your timeline, like which coins you're bullish on, which coins you want to hold, like your intention for getting in the pool. There's a ton of different things that you need to be aware of before getting into something. But here are some examples, right? Sol USDC, as I went over yesterday, typically there's some pretty high volume on Solana, so you can capture a good amount of the fees. Actually, I want to go back. This will be helpful for you guys. I saw the word volume, and it made me think to provide even more clarity on something. So as the liquidity provider, you get paid to the proportion of the amount of liquidity that you have put in the liquidity pool. Starting to get dark here, so I can turn this on. Okay. So if you have 50% of the liquidity that's in this liquidity pool, if Bob had that, then he would earn 50% of the fees that Susan pays. That's how that works. Okay. So if there is, you know, $50 million worth of fees that are going, that's a high number. If there's $100,000 worth of fees that are going through the Solana USDC pool, and if I have 50% of the TVL that's in that liquidity pool, if I have 50% of the amount of money that's in that liquidity pool, I make $50,000. That's how that would work. Okay. So you're pairing like a high volume coin with a stable coin. So there could be specific situations where you might want to do that, but you also got to keep in mind that with Solana against USDC, they're not going to be highly correlated pairs. So if Solana goes up in price, then your liquidity position will convert to being only in USDC. So you're not going to earn on the, the upside of Solana. So if you were to do something like that, typically you wouldn't want to use like your Solana bags in order to put that in there, because if you're bullish on Solana right now, you don't want all of that to be converted into USDC based on how impermanent loss works, which we'll cover that a little bit later. You could put in something like USDT, USDC. Now, those are fully correlated assets that don't actually move. So you could create very tight positions on those liquidity positions that you create. It's great for predictable fees and no impermanent loss because they stay the same. They're fully correlated one-to-one pairs. Okay. No, one more. Back. But you're not going to earn quite as much, right? Because the fees for that are going to be lower and the pools are going to have a lot of money in it. So you won't earn quite as much money from those. And then you could put something into something. You could put some money into like a CBBTC ETH pool, two of the most trusted assets. Typically, it hasn't really been the case this last cycle, but they're typically fairly correlated. Has not been like that for 2024, 2025, but typically they're pretty correlated. But they're also going to be less volatile. So there's a chance that a position in CBBTC and ETH might be a little bit more of a hands-off position, depending on how tight you make the range. Okay, cool. Now, a lot of people think liquidity pools are like betting on horses. You pick one, you cross your fingers, and you hope for a payout. But that's really not how it works. We pick pools that have huge daily trading volume. That means tons of traders using it, and then we get paid fees for doing it, right? Now, there is a possibility that you could go into a liquidity pool and not get paid, right? But that's why you have to know what you're doing. And the reason that might happen is like we've seen liquidity pools where it says that you have a certain percent APY, but that APY might only be like for a period of time prior, and past volume through a liquidity pool doesn't mean, future volume in a liquidity pool. So you got to be strategic in picking the liquidity pools. That way you're not, going to put money into a pool that nobody trades with. Okay. All right. Remember, traffic equals traders equals fees. Pretty straightforward. Now, there are actually two ways to provide liquidity. And the second one didn't come out until 2021, which actually was pretty fast in the grand scheme of things, but it really didn't get like hyper adopted until like 2022, 2023. Uniswap v3 is really what did it. So it's full range liquidity providing and concentrated liquidity providing. So to explain this, think of it like this. Like when you provide liquidity, it's kind of like fishing. You can either fish the whole ocean, cover every price range. That's full range. That's what that is, right? Or you can just fish in a stocked pond where all the action happens. That's concentrated liquidity. You're not covering everything, just the high yield zone. That's going to be traded, like where that liquidity would be traded with the most, which would then earn you more fees, right? And I'll be honest with you guys, since concentrated liquidity came out in 2021, and when I say came out, I mean invented. Like that's how new we are to this stuff. Like that was a big problem with providing liquidity, was only being able to do full range liquidity, because people weren't getting very good capital efficiency on the money that they put into the liquidity pool. That's what they call that, capital efficiency. How efficient is your capital being put to work inside of that liquidity pool? So then concentrated liquidity came out with Uniswap v3, and it completely changed the game, right? Every DEX quickly adopted the same tech as fast as they possibly could. It was a little tougher for them to do it because Uniswap v3 set up like a certain restriction to where not everybody could have that code for like 3 years. They didn't make it fully open source so they could have some time to get ahead of the competitors, which is why SushiSwap kind of fell off for a while, to be honest with you. They weren't able to get as much liquidity. So every DEX quickly adopted it, okay? Because they were afraid that they were going to lose all their liquidity to Uniswap. And if Uniswap has all the liquidity because they have the best technology, why would anybody provide liquidity to the other companies? It just wouldn't make sense. So it's a race to always improve the systems, okay? So just to kind of recap it real quick, with full range liquidity, your liquidity covers every price range. You'll earn some fees no matter where the market moves. It's easier to set up. There's like an extra step that's not involved. It's good for beginners to get their feet wet. You never have to worry about going out of range because you take up the entire range of the liquidity pool. So it's every price that could possibly happen. but you're going to get far lower returns compared to concentrated liquidity. Now, concentrated liquidity, which when you go on to like Orca, there's full and then custom, right? So they don't even call it concentrated liquidity, but that's what it is. It's concentrated liquidity. For this one, you only cover the specific price range that you actually choose, right? The smaller the price range, the more fees you collect because your liquidity is concentrated, right, into a smaller portion of like the price ranges. And since your liquidity, since your available money, since the money that you put into the liquidity pool is closer to the ranges of what's actually being traded with, you earn more fees. So it's almost like a sniper approach versus like a shotgun approach, right? If you're a sniper, you could go ahead and aim for exactly where everybody's trading, but you could go out of the range and then you might have to rebalance, or you might have to take out your pool, or you might have to do something to change it so that you start making some fees back again. So if your liquidity goes out of the zone, you won't earn fees. You can set a wider range to be more hands off. So basically, it's like it takes some like playing around with it to really get good with it. You have to know like, how often do I really want to check this? It's something you really get a feel for after doing it for a minute. But the ability to do concentrated liquidity creates a lot of opportunity for strategies, a lot. And like our team blew my mind when they showed me everything that they're doing and what they're going to be teaching you guys if you guys decide to move forward with this later. But how do you know which pools are actually good, right? After all, you want to maximize your returns. And as a liquidity provider, you'll always be on the lookout for good yield opportunities. But there are a few metrics I use to pick my pools that are always like a reliable metric that allow me to find ones with good earning potential. Okay. Most people assume it's luck or insider info or hours of on-chain research, and it's none of that. You don't have to guess. You just use data. It's right in front of you. I gave you guys a little bit of a tease of it on DeFi Llama a little bit ago, right? Now, and I said right here, just like traditional investing, but the data goes so much further than traditional investing. Now, a typical company, they store their data in a private area, right? So, and the best way that I explain this is like, let's go back to the days of, and this is going off the presentation a little bit, but I think this is important, so I want to make sure I give it to you guys. If you guys were to, let's go back to the dot-com boom. You had a very important decision to make, which could have either made you a lot of money or made you a little sad, which is, which of the two search engines do I want to invest in? Do I want to invest in Google or do I want to invest in Yahoo? Now, back then, you're probably trying to make that decision based on news, based on earnings reports, based on all this stuff that they put out in front of you so that you can see it, right? That they legally have to because they're publicly traded companies. What if you were able to see without a doubt the amount of searches Google's getting every single day? What if you were able to see by going into their back end to see the treasury, to see exactly how much money they're making from ads every single day? Would that data be helpful for you? Put a 1 in the chat if that data would be helpful for you. Well, that's exactly what you can do with crypto, because the data is stored on the blockchain, and the blockchain is a publicly accessible ledger that's transparent that you can see. So with these pools like Orca, or these protocols like Orca or Uniswap, we can see the revenue they're bringing in on a daily, weekly, monthly basis from fees. We can see the TVL that they have. We can see all those things. And the beautiful thing that adds into your conviction with your investments is that if you start to see a divergence from the data of what you previously saw when you initially invested, then you can just switch over to the other investment. So like with Google, if you saw that Yahoo was starting to just lose search results, lose the amount of people that were searching, and it moved over to, Google getting more and more and more, you could see that happen in real time and go, well, I guess Google's the better choice. Click. And then you switch over to investing in Google. And now you're not stuck holding Yahoo. The same thing could have taken place with AOL or with Blockbuster. So you're not stuck holding the cryptocurrency that's dying out, which I promise you, I've seen it happen. We've been in the industry since 2017. Nick, since I think he said 2014, 2016. And we've seen a lot of projects come and go. And a lot of the projects that you guys are looking at right now, I promise you, in 5 years are going to be completely wiped off the earth. They're not going to be here anymore. And it might be some of the ones that you think are going to do great. We don't know. Cool. So finding a good pool is just like buying a rental property. A rental property, you got to look for a location with demand. And you got to stick to safe neighborhoods. A liquidity pool, you have to look for volume and TVL. You got to stick to known coins and protocols. You're not guessing, you're filtering with a precise strategy so that you know what to look for. But what are you looking for? You're looking for TVL, the total amount of money in the pool or in the protocols. You're looking for high TVL because the more liquidity, the more safe it typically is, right? More trusted. You want daily volume because the interesting thing about making money on fees is that if there aren't people trading, providing a high daily volume, you don't make any money from the fees, right? More volume equals more swaps, which equals more fees paid out to you if you're providing the liquidity for that. You also want to stick to trusted coin pairs, right? If you are, a good rule of thumb is don't go into a liquidity pool that has a token in it that you wouldn't want to be holding by itself, because there's a chance that one of the coins goes up and the other coin goes down or stays flat, and then you're stuck holding one of the two coins. Now, that can be a good thing depending on your strategy and your intention when you went into the liquidity pool, but you don't want to be getting into these coins that, like, you don't know if they're going to go to zero. And sometimes they'll be very tempting because you might see liquidity pool like APYs of like crazy numbers, but it's with these coins that are like not real coins. And then you get into it because you're like, wow, 50,000% interest in an hour. That's a little aggressive. I haven't seen that, but you get the point. Cool. So out of these two pools, go ahead and put in the chat, which one would you choose? We made this one really tough on you guys. Yeah, I would definitely go with pool A if I had to choose between the two. Honestly, I'd probably want even higher volume if there was $300 million in TVL, personally. But yeah, I'd definitely go with pool A. All right, so I always go where the traffic is. Bigger pool means more trades, more fees, more safety. Tiny pools promise huge APYs to lure you in. However, there's no guarantee that this $2 million in trading volume that happened yesterday will also happen today. There's no guarantee of that. So which type of LP is right for you? Both technically work. It depends on how much precision you want, how often you want to cast your net. Do you want to be more hands-on, or where you're like adjusting things, or do you want to be laid back? Because of you can set your liquidity provision to be like in a super wide range. I almost never go with full range, to be completely honest with you guys. I just wanted to make sure you're aware of both so that when you guys go to navigate this on your own, you guys know that there's two, right? Honestly, if it was up to me, I might not have even covered the full range because I literally haven't used it since concentrated liquidity came out. Okay. So, and this is actually the cool part. There are even tools that will allow you to reinvest profits, that'll help you automatically rebalance or even close your position for your liquidity pool on autopilot, right? Kind of like how when you go to set a limit order on your exchange, you can set it to automatically sell or buy your cryptocurrency at a certain price. That same thing is possible with providing liquidity. So you can, this opens up some pretty unique strategies when you know how to leverage like impermanent loss, and you also are trying to get like, maybe you want to DCA and whatnot there, like use the impermanent loss to your advantage. It's opens up some pretty cool stuff. So most people really, they'll read high yield and they'll think, oh, great, another roulette wheel or more risk of losing everything, right? And honestly, if you've been burned before chasing something that promised big returns, that reaction makes complete sense. But let's zoom out for a second. Most people hear high yield and instantly think another roulette wheel, right? It's not that at all. This is not a casino table. It's a 2-compartment safe, right? Think of a liquidity pool like a 2-compartment safe. You put in $2,500 of coin A and $2,500 of coin B. They might shift around based on prices, but guess what? The safe doesn't open. Your funds stay inside. Your wallet is the only thing that can unlock the safe, because your wallet has the key that signed the smart contract. So if you guys see here, private key with your wallet, your private key, it signs the smart contract, and then you're the only one that could reverse that smart contract to bring the money back and open up the vault. Okay. So because of this, your money stays in the pool, and there's no margin calls. There's no forced sell-offs. There's no liquidations. There's no account blowups. None of that. However, the only risk is your balance might end up holding more of one coin if prices move, like we've covered with impermanent loss, right? Your 5K, for example, doesn't just vanish into thin air unless if you get into a protocol that's shaky and then they scam you, right? But do some research and only get into protocols that you trust. There's no casino table here. Nobody can swipe more than what you put in. That's why it's called providing liquidity, not betting it. Now, what exactly is impermanent loss? Okay. It just means that if prices change, your pool adjusts to based on like how much coin you're actually holding. So like if you went into like a Sol USDC pool, you might hold more, like you might go into it at 50%, but then as Solana goes up in price or goes down in price, because USDC won't move, or as like Solana goes down in price, then it will shift the amount that you have. It might end up being like 25% USDC, 75% Solana, or vice versa. So let me explain this a little bit more. So this is what I'm talking about. Solana might go up, which would then force you to have less Solana in the pool and more USDC. So looking at this right here, this is a Solana USDT pool. So not USDC, but USDT. So let's say you got in right here at $180 per Solana, okay? And then let's say that Solana, let's say that Solana dropped in price right here. What this would do is, because it works on, and I go over this in the course in great detail, got like a 20-minute long video that explains all the intricacies of like even the math of like how this works. And it's honestly revolutionary what these developers have been able to figure out. But basically what happens is it works off of something called like a constant product formula, which is like X times B equals Y. So basically and that's going to be jargon. So if that didn't make sense, don't worry about it. It doesn't matter. Basically all it means is that as the price of Solana goes down here, your liquidity will sell out of USDT and into Solana. Okay. So when you get to the bottom of the range, at the end of this range, your liquidity position will be 100% in Solana. If it goes out of this range, your liquidity will be 100% in Solana and you will not be earning any fees. Okay. If your liquidity position or the dollar value or the range, I guess, the price range goes up to the top of this yellow line, then your Solana will sell into USDC until you get to this top line here. And then your liquidity position will 100% be in USDT. Sorry, not USDC in this one. and you will no longer earn fees once you are out of it. That's how that works. Okay. Now, with intention, you can use this to your advantage. Okay. So that's what impermanent loss is. But it's called impermanent loss because the loss isn't locked in, right? What happens is, if you leave your position alone and prices swing back up to where they were previously, then your balance snaps right back as well, right? So you could leave the range, and then let's say it went back up to 180, your liquidity position would go back to 50-50, 50% Solana and 50% USDC. Okay, cool. So it really only becomes a real loss when you end up pulling your money out, right? That's why it's considered impermanent loss. And yes, there are some cases where you could have made more money by just holding the coin itself without putting it into a liquidity pool. But knowing this is also what allows you to create a strategic plan to maximize both a price appreciation while simultaneously earning yield. Like if you were to get into correlated assets that are going up at the same time, which I'm going to show you when I share my screen here in a little bit. And we're definitely going to be going over an hour here, by the way. So just to give you guys a heads up, we got a lot of slides left, packed with a ton of value for you guys. So isn't it bad if I end up with more of the dropping coin? That's actually one of the best parts, as I was saying before. Most people only see the scary side of impermanent loss, but it can actually work in your favor and help you stack more assets automatically, almost like an automated DCA strategy that earns you yield while it's taking place. When prices dip, your LP position is quietly buying more of the cheaper coin, and it keeps earning fees the entire time. This isn't a flaw, as everybody makes it out to be. Impermanent loss can actually be a feature that accelerates your returns if used strategically. Most people, spoiler, do not use it strategically. It's like passive dollar cost averaging. You're buying the dip automatically without lifting a finger. Guys, if this has been helpful, I just want to give a quick little temp check. Can I get like a hashtag it's paid? Is this like mind-blowing for you guys? This is like we're putting you guys on to literally the most up-to-date technology in the financial world right now. I know that I'm just some random dude that's speaking to you on YouTube, but I promise you, this is the cutting edge of what is changing the financial world as we know it. But Chase Bank isn't going to talk about that. Morgan Stanley isn't going to talk about that. Why wouldn't they want to talk about it? Because they lose their leverage if crypto really takes over. That's what's happening. And that's why you don't hear anybody talking about it. All right, guys. So far we've talked about the main risks of liquidity providing as impermanent loss risk. And the next one is smart contract risk, which we're going to go over a little bit more tomorrow. Basically, what smart contract risk is, it's like code bugs or like exploits. They're rare, becoming more and more rare the more that we evolve in the DeFi space. But we'll cover how to mitigate this with, looking at audits plus strategy tomorrow. And in just a minute, I'm going to actually share my screen and show you step by step getting into another liquidity pool that I want to prepare for you guys. And I actually kind of already did prepare slightly. Okay. And then another thing with smart contract risk is like, this is something that in 2022, 2023, there's actually a decent amount of exploits. But what is absolutely incredible is how like few exploits are actually starting to happen. And the best way that I can really compare this to anything is airplanes. I don't know if you guys, I wish I had a chart. I didn't think to put this in here. I would have put the chart in here. But I don't know if you guys have looked back at like the history of like airplanes and them being created. But when airplanes were first created and we started doing like, private flights and like commercial flights, there was a lot of deaths when it comes to airplanes proportionally to what it is now, right? Because it was a brand new technology. So as people are getting on their commercial airline flights, like it's definitely riskier when it was first getting started. But now that this technology has been around for like 4 or 5 years, 6 years, It's becoming less risky every single day. And now we're at a position where I actually feel confident with like bringing this to way more people, right? Because we've been observing this, like the DeFi space since 2020. We didn't talk about this, but Yoni actually got the first airdrop in history, at least the first substantial airdrop in history, which was the Uniswap airdrop. I think he got like 16 grand for that puppy. That was, sorry, Yoni, if you didn't want me to tell people that, but I did. So cool. We'll dive into that tomorrow. So most people think DeFi is just for 25-year-old Discord wizards, but it's really not. Truth is, if you've ever sent a wire, paid a bill online, logged into a brokerage, you already have what it takes. I'm going to show you how, because all you're doing is clicking buttons on a screen. Guys, it's not rocket science. You're just clicking buttons on a screen. You just have to learn which buttons to click. Okay? Let me give you a better way to think about this in 5 simple steps. Okay? So for online bill pay, you log into your bank, you link the account you want to pay, you choose amount plus schedule, you click confirm, payment goes out, you're done. Right? DeFi setup. You open your wallet, you connect to a protocol like Orca, you choose the amount plus the pool, you click deposit, your yield starts, you're done. Right? It's that simple. It seems complicated because it's foreign and you haven't done it yet, but you build up experience through repetition. Just like the first time you sent money through online bill pay, it might have been a little scary. You might have been worried that it was going to actually send, right? You might have been used to writing checks, but then you did it for the first time and you sat there. You just sat there and you're probably like, oh gosh, I hope this goes through. I hope this goes through. I hope this goes through. This is the next evolution of that, guys. This is now crypto. You're sending online money either way. Now, you just don't have to go through a bank to actually do this stuff. Cool. It's not complex. Oh, it's not complex at all. It's just new. You don't need to be technical. You don't need to be young. You just need a few reps. And today, you'll get into them a little bit more. All right, cool. Now let's jump into the demo. All right. Let me see. How are y'all feeling while I get this pulled up? Good. I learned some of your guys' favorite color yesterday, which is pretty cool. Saw somebody likes the color cobalt blue. It's quite specific if you ask me, but I respect it. All right. Let me actually go. Let me pull up DeFi Llama again. All right. So if you go into DeFi Llama, one thing you can actually do, which is pretty cool, is you can go over to, this is almost like the front page for DeFi, guys. Like literally, this website is an absolute gold mine. I mean, just if all you get from coming to this 3-day session, just so I can add like some like intention behind like how powerful this technology is. If you get one thing from the session, just write down DeFiLlama.com and just learn how to use it. You get so much insight that'll help you with your trading journey. It's absolutely insane. Okay. So what you can do with DeFi is it's got this dashboard here, right? With the million amounts of data that it has. You actually have the yield right here. Look at this. So you can literally just go in here. You could search. You could say, I kind of want to earn some yield on ETH. Say, okay, what yields can I get with ETH? Okay, we got ST ETH with Lido paying 2.81%. Okay, cool. It's sorting by TVL right now. So with the most TVLs, that's what's going to pop up. Got something like 3%, 2%, 5%, 32%. Interesting. Okay, that's USDCW ETH on Uniswap V3. You could also sort by APY, which could be a dangerous game to play, to be honest with you, because look at how little TVL we have over here. I probably wouldn't go into something like this. I say probably. I definitely wouldn't go into something like this. because maybe that APY happened yesterday, but with this little amount of TVL, what are the chances that we're going to get that volume again tomorrow? We have no idea, right? So this is one thing that you can do to actually find some different liquidity pools. However, please be careful, right? You have to know what you're looking for. You don't want to just come in here, sort by the highest APY, come in here, click on this coin, and then who knows, you might be getting into a protocol that's not real, right? Or you could be getting into something that has a high probability of having a hack take place. You want to be making sure that you get into things that are trusted, right? Like these are Uniswap V2. So you're going to have limited functionality compared to Uniswap V3. Like you're not going to have concentrated liquidity on Uniswap V2, but you will on V3. Cool. So I showed you how to do that there, but I already have a pool that I want to show you guys, which is Fartcoin Solana. Again, sounds ridiculous, but Fartcoin is near and dear to my heart. And the reason for that is because in our community, we actually called Fartcoin at like 9 cents. I know there's probably some APU members in here that got it back then. And it's ridden up to, as you can see, well, this is Fartcoin Sol, so you won't be able to see it, but it's at like $1.60 right now when trading against the US dollar. So pretty huge gains. So I wanted to go over to Fartcoin Sol real quick for a reason. Now, Fartcoin and Solana have both been going up pretty drastically, right? I'd say exponential gains for both of these. However, this looks like it's trading sideways, which is interesting. Somebody throw in the chat why that might be happening. Why might this chart be trading sideways, yet both Fartcoin and Solana have been going up in price? Let me go over to here. Let me read the chat. Both moving at the same rate. This site right now, Bubba, is Orca. Here. Orca.sl. Prices are correlated, going up together, Sean. Kevin, both pretty equal in appreciation rates. Same percent growth. Ron, yeah, you guys are nailing it. They have a high correlation, right? Jake, what's going on, bro? The correlation price. So both of these coins are highly correlated at the moment. So now that doesn't always mean they're going to be, right? But we have to use previous data to help inform our current present decisions. We have to use what we have. And we don't have future data, right? Unfortunately, I wish I had future data for you guys. Maybe we'll get there. We got AI advancing pretty quickly. So maybe one of these days we'll have future data. But yeah, so I can get in this pool. And what this allows me to do is this allows me to get into two coins that have a tight price correlation so that I can earn yield while they're both appreciating in price at the same time. So as you can see from this here, I had about $10,000 in here, but I took half of it out and it's only been in there for like a day because I only did the Solana USDC one yesterday so you guys could see what that looks like. I would have never actually gotten in that position at that current time because we're in a bull market and I don't want to have the impermanent loss of Solana take place. I want to be able to capitalize on the price appreciation. But I would be in something like Fartcoin Solana. This chart looks great for yield farming. So I can get into here and then I can deploy some capital. So I've already got a pool open. So this is a new thing that you guys haven't seen yet. If I want to deploy liquidity here, let me go back one in case you guys weren't here yesterday. Basically, you could click this here. You can see 30-day yield is at 15%, which is pretty insane for 30 days. You not get that because you might go out of the range and you might have to reposition yourself accordingly. But you can go into here and then you'll see that I already have a position open here and I can actually add to my position. So I can deposit more liquidity. Boom. All right. And now you'll see it's making me put in more Fartcoin compared to Solana. If you know why, go ahead and put it in the chat. But the reason that it's making me put in more Fartcoin in comparison to Solana is because we're on the lower bottom side of the range right now. So I'm going to have more Fartcoin in this pool in comparison to Solana. If this price was up here, it would be the opposite. Okay. And it's loading. I don't know why it's not going. There we go. So then I can deposit that. It's going to ask for my, this is what's happening here is what I talked about before, is I am signing a transaction with my wallet. Since I'm signing this transaction with my wallet, that's my private key signing this, saying, hey, I approve of this smart contract. A smart contract is just like a written contract. It's a contract that has conditional if-then logic that says, if this happens, then that happens. Except instead of it being a written contract in like human readable language, it's code. Okay, cool. So let me go back over here. All right, you can see it's now in the pool. Awesome. All right, guys, if that was valuable, let's get a hashtag it's paid in the chat as I keep moving on. All right. So many idle investors also think if prices are rising, then yield is unnecessary. But here's the truth. The smart investors don't just ride the markets, they extract from it, right? Let me show you. So let's say you're only holding versus holding plus yield. If you're only holding, your portfolio grows if the market goes up. If you're holding plus earning yield, your portfolio grows from the price, plus you're getting daily fees. That's one revenue stream versus two, right? Now, if you're only holding, there's no income unless you sell. If you are holding and earning yield, then you make money without selling, right? At least the position that you have. You might need to sell the yield that you're earning if you want to make money in that way. But it's also, what's the definition of making money for you? Is it making more US dollars? Is it making more Solana? What do you actually like? What do you determine to be like your main, what is value in your mind? How do you denominate your wealth? So linear, only holding is passive. It's like linear growth, right? If you're holding plus earning yield, then you could be putting in together like a compound strategy where you can reinvest your earnings and then grow faster. If you're only holding, then you control over returns is entirely dependent on the price. If you're holding plus earning yield, then you have a dual engine system. You get the market that's, going up in price, and you get the consistent fees, and you get a little bit more peace of mind if you start to put your crypto to work for you, because income is coming in, whether you are in a bear market, whether you're in a bull market, whether you're in a crab market, you can generate income regardless. Okay. Just like with real estate, buying the asset is step one, but the smart investors don't just wait for it to appreciate. They set it up to generate income now. Okay. Passive income isn't just about surviving bear markets. It's also about maximizing the bull runs, right? You're not just hodling, you're compounding. And at this point, you might be thinking, cool, I've got this. I'll figure the rest of this out on my own, right? And I'll be completely honest with you guys. That mindset is exactly what held me back early on, right? Before I started investing in real mentors, guys like Alex Hormozy, Sam Ovens, Tanner Chittister, and his brother Benson. If you guys know who any of them are, go ahead and put like a one in the chat, right? They're pretty renowned business individuals that have done huge things, right? They're all at least 9-figure earners in the entrepreneur space. Now, I spent years trying to duct tape business together by myself. Honestly, more time than I care to admit, right? I didn't want to ask for help. I thought I was saving time. I didn't want to spend the money, but in reality, I was slowing everything down. I was choosing to spend with my time instead of with my money, which, to be fair, I didn't have a whole lot of money back then, right? But the minute I did, I was able to make something happen. Everything changed when I got in the room with the people who already built what I wanted. I stopped second guessing every move. I got the shortcuts, the clarity, the confidence. I stopped trying to stopped trying, right? I stopped just like seeing if I could make it work. And I started actually building with intention. Once I finally said, screw it, and started getting in the room with the people who already built what I wanted, that's when it changed. I got the blueprint, the shortcuts, the clarity, and more importantly, I stopped second guessing every move that I made. So yeah, you could probably just figure this out eventually if you want to, right? You just have to decide on how you want to pay. Do you want to pay with your time to gather the knowledge, or do you want to pay with money, right? And some of you might not be in a position where you can pay with money at the moment, and that's totally okay. We do still have the 97 a month offering that you guys can work with us in, if that's something that makes sense for you. That's Altcoin Pro University. So if that is something that you guys want to do, you can just go to altcoinpro.com and it should take you right there. Okay. Now, this is something I didn't quite notice. And this was something I wish I was taught a long time ago. Knowledge is supposed to compound. Knowledge is not supposed to, you're not supposed to try to figure everything out on your own. Imagine if the guy that invented the light bulb, the smart bulb here, I don't even know who that is, right? It's funny, we know Thomas Edison, but we don't know the guy that invented the smart bulb. It's probably Apple. I don't know why. It's probably Apple, even though they don't even have them, but they definitely did. But the people that invented the smart bulb, they didn't try to invent the light bulb in order to get to the smart bulb, right? They didn't even have to try to invent Bluetooth in order to make a light bulb. They just saw a problem and they're like, okay, well, we could just compound upon the knowledge that people have already found out before us. And then I'm not starting at a place of ground zero trying to figure it out on my own, right? There's no need to, I used to have this like ego when I was younger that was like, I got to make it on my own. I got to do it on my own. Like I can't, like, my success can't come from other people, which was absolutely ridiculous. And I wish I could go back in time and let's just slap myself in the face, because that's genuinely how I thought. And I'm kind of embarrassed to say it out loud. But had I known before that, like, we're supposed to learn from other people that have already figured it out so that we can progress as a society, then things would have happened a lot sooner when it comes to business for me, right? So you've really got two paths here, right? Path number one is you get to walk away with a folder of notes and hope you figure it out eventually. Path two, you could walk away with a real blueprint, clear support, and the chance to save yourself time by limiting the guesswork. Then you'll want to pay, So what happens next could actually change your future forever, right? And if that's what you're looking for, then you'll want to pay close attention to what we're about to walk through. This is where we're getting to the part where we talk about what we're going to be offering you guys. So, like, to be honest, if that's not something that you guys are even interested in, then you guys can leave. Okay. I want to respect your guys' time. So, because this next part isn't about DeFi mechanics, what comes in the next few minutes is the difference between walking out of here with a chance at generational wealth from crypto, because information isn't the problem. You've already seen how powerful this can be. The real difference is having the right people in your corner, helping you take action, avoiding the traps, and actually building something that lasts. It's about getting a personal blueprint from someone who already spent years, from a full team actually, who have already spent years trying to figure it out so that you don't have to. And I know that firsthand. Nick and I have spent more on mentorship and education in the last 5 years than most people ever will with crypto. But first, I want to kind of pause things for a minute. I want to ask a slightly uncomfortable question, which is, why did you even get into crypto in the first place? I want to pause here and just have you guys think just for a moment. Feel free to share it in the chat if you want to. Why did you get into crypto in the first place? Okay. Now, I'm sure it wasn't just to make an extra 5% a year over your traditional portfolio, right? To quietly stack a little bit of XRP, ETH, Bitcoin. So hopefully you could come out ahead of the S&P 500 over the next decade or so. I don't think that was it, right? You more than likely got into this because you saw the asymmetrical risk opportunity right in front of your eyes, right? An opportunity where you see the outsized opportunity of what could be on the other side of crypto investing compared to the risk of what you could potentially lose. Maybe you're in a position where you actually missed the .com boom, or maybe you got it and you want to catch another one, right? That'd be cool too. I was personally a little too young. I wish I could have, taken advantage of that. It's actually one of the things that made me be so bullish on crypto is like, I used to think back and go like, man, if I was only older to take advantage of the .com boom. And then when I saw crypto, I was like, wait, this is my .com boom. And that's why I took it so seriously in 2017, to be completely honest with you guys. But maybe you did miss the .com boom like me, and you felt like this was your opportunity where you as a normal everyday person can make up for that. This is a place where a normal person without Wall Street connections, without family money, could turn smart strategic moves into something close to generational wealth. It's possible. I'm not saying it's a guarantee by any means, but it's actually possible with crypto. If you genuinely believe that crypto is here for the rest of our lives, which you're on this call with me today, so I hope that's what you think, then there could be a significant transfer of wealth that goes into the crypto space, and you want to make sure that you're prepared for it. Okay? Cool. I got into crypto because it's the only financial market where I personally feel that if you play it right, you can 10x, 20x, or even 100x your net worth in a fraction of the time it takes compared to traditional finance. Okay? It's literally designed for that kind of exponential growth. That's the rare opportunity that presents itself when you catch an emerging technology before it takes root within the entire infrastructure of our society. I'm going to say that again. That's the rare opportunity that presents itself when you catch an emerging technology before it gets its roots ingrained within the entire infrastructure of society. Imagine one day when we get to a point where we're not sending bank transfers. We're sending crypto, peer-to-peer, peer-to-peer. We're avoiding the banks. We're using decentralized exchanges regularly. Imagine when that becomes the normal. The government just passed the Genius Act, which applies way more like regulatory clarity around stablecoins. The United States government, they are actively saying they want to be the crypto leaders of the world. Like, if you would have told me that in 2017, dude, what? It's absolutely crazy, right? It's like almost becoming normalized at this point because it took so freaking long to get here in my eyes, because I felt like I've been waiting for this for years. And back in 2017, everybody thinks you're a moron by buying Bitcoin and stuff, but everything happens for a reason, right? But here's where the paradox actually comes in. Crypto is the easiest market in the world to make life-changing money. It's also at the exact same time the easiest place to lose absolutely everything. It only takes one cycle. And honestly, it only takes one click. One nasty bear market, one scam link that you click on in the middle of the night where you thought that you were safe, but because you didn't have an intentional wallet security system in place, you lost everything. It could be one emotionally driven buy or sell to get completely wrecked and lose years of progress. I got into crypto because it's the only financial market where if you play it right, you can get that. But on the other side of that are all of these risks that you need to be aware of. It only takes one mistake to wipe out years of progress. And I'll be honest with you, I see it all the time. I would love to come on here and tell you guys that I've never had any students that have ever been scammed. I wish I could come on here and say that to you guys, but I'm going to be honest to you guys. It has happened. I can lead a horse to water, but I can't make it drink. That's why you need to have security systems in place to prevent it. Because even on your worst days, something could happen. But if you're using our security systems, then you'll be protected. You just have to intentionally curate your wallet security systems, which we go over in the program. Okay. Cool. Let's get past this. Cool. So I don't know about you guys, but I didn't get into this for some retirement nest. I was kind of future pacing my life one day. And this is like a real story. I was future pacing my life one day back in 2017 when I was thinking through this whole crypto stuff. And I looked at two potential outcomes. I said, one, I see how new this technology is, right? So I could be early to something that's absolutely revolutionizing the entire world. And that could put me in a very unique situation, both financially and from an entrepreneurial standpoint, to where I could be a leader in this industry and help a lot of people if I like take the risk and I devote time to this right now in 2017. And then I looked crazy 2017, 2018, 2019, 2020. Me and Yoni looked absolutely insane. Everybody's like, oh, you're still doing that Bitcoin stuff. But we believed that there was something here. We believed in the technology, and we wanted to trust ourselves that we weren't crazy. So we kept diving deeper into it, and we kept researching it despite what everybody was saying, despite Chase Bank telling us that, oh, you're putting your money into a hole that it'll never come out of, or like Chase Bank used to literally say that they would fire any of their employees if they start to get investing into crypto or anything. It's like all this stuff. And we just silenced out all the noise because we trusted ourselves. And we just believed that this was actually going to become something. And I knew that if this did become something, then I would be able to set up my family for generational wealth. It's where my kids wouldn't have to be worried about money. Their kids wouldn't have to worry about money. Their kids would never have to worry about money, because I made an intentional decision back in 2017 to go all in on this, because I saw something that most people were not able to see back then. And that can be you guys today. Today can be your 2017. Today can be where you draw the line in the sand and decide, I'm going to be that person. Okay. So stacking your XRP, your Bitcoin, your ETH, you're probably still, you'll beat most traditional finance plays, but sleepless nights, hang on, let me go back a minute. Hang on. But you're still not going to be able to pull the most out of your portfolio by just stacking these coins, right? You want to be able to optimize your portfolio to be able to like extract all the juice out of the orange. Okay. Cool. All right. And this is what you guys are going to want to be avoiding. You're going to want to avoid the constant stress of crypto, right? Sleepless nights, wondering if your portfolio is going to get cut in half, all that stuff there. You're like double checking if your wallets are still secure, or if the centralized exchange that you're in is going to go insolvent overnight, right? But here's what you need to ask yourself. How do I leverage my current portfolio to make the stress of crypto more than worth it? Okay. You need to utilize a predictable system, a system that saves you time, energy, and attention while maximizing your opportunity in crypto and minimizing your downside. But here's the truth nobody wants to hear. Most people will never get there because they think crypto is just about buying a couple coins, sitting on them, and praying it all works out. Or maybe throwing some money into the hottest meme coin play on Twitter and hoping it moons, right? Your crypto strategy should be intentional, guys. Nobody just hands you a simple step-by-step plan that actually turns your portfolio into an intentional money-making machine. It's unfortunate. So what I'm about to offer you right now is exactly that. It's not a guess. It's not a gamble. It's not another course to watch and forget, right? But a full system that can be implemented by anyone in order to maximize your opportunity in crypto while minimizing your downside. Are you guys open to hearing about it? Give me a yes in the chat if you're open to hearing about it. It's not free. It is a paid product. So I don't want to schmooze you into thinking it is, right? And I only want to offer to people that are genuinely interested. Okay. cool. All right, amazing. So seeing a bunch of yeses come into the chat. I appreciate you guys. So, well, all right. So I'm proud to announce that we are launching our one-on-one accelerator program. And not just the one-on-one accelerator program, but legacy access to the one-on-one accelerator program, where you'll get direct support from our crypto mentors to build a bulletproof portfolio that pays you daily. It's protected from black swan events, and positions you for pre-market gems that the average investor never even sees, right? It's usually too late because they're not in the pre-markets. They don't know how to access them. Using the exact frameworks and research edge our team has used to protect and grow seven-figure crypto portfolios through multiple market cycles. And in just a minute, I'll tell you exactly what it looks like and how you can start building it with hands-on help from our team. So no pitch here, just a transparent look at what we offer. I'm not here to hard sell you. You're a smart, experienced audience. I could tell from reading the survey responses that you guys sent in. You guys aren't dumb. You guys know what you're doing, right? So I'll simply walk through what we've built. And then if it's a fit, great. You guys can click the link and go through the application. If not, no pressure. It's not a big deal. Appreciate you guys showing up here and giving us your time, regardless of what happens. But to be honest, you guys could be making way more money from your current portfolio. What's missing? What's missing is an intentional plan to maximize your return while minimizing your downside in any market condition. So you can stop being reliant 100% on bull markets. So the ones who actually build generational wealth, they've got systems. They're diversified across the right wallets. They're earning consistent compounding yield. They're quietly farming airdrops, and they're positioning into pre-market gems before they go viral. Okay. They're not stressed because the entire strategy is designed to work whether the market's up, down, or sideways. So let me ask you this. We've personally consulted 8- and 9-figure investors, hedge fund owners, even a royal family member in Dubai, right? And every single one of them had the same 3 problems. Okay. They all had the same 3 problems. Do you know what they are? Drop in the comments below if you know what those 3 problems are. They're probably similar problems that you're currently experiencing. Quick hint. Okay. So the first problem is a lack of a solid foundation. They had scattered portfolios with no intention put towards security or organization. They had no clue how to vet coins to make sure that they were actually holding something that's going to be around in 5 years. There was no specific measurable goal that they can act as, that they can use as their North Star, right? To guide their actions and decisions that they make. They have a completely imbalanced portfolio that doesn't account for what stage of the market we're actually in, so they can be risk adjusted. Because it's not like this is traditional finance, guys, where it's typically the same market for 10 years, right? It's a little different. Problem number 2 is that they're not maximizing their portfolio potential. They weren't staking or LPing, and they weren't earning any passive APY on their coins. So they're literally missing out on a 5 to 10% earn per year on some of the coins that they're already holding, right? They weren't putting their stable coins to work for them to make passive income. We showed you guys a position on the VIP day 1, I believe. Or actually, no, it was yesterday, the general session, that was earning about 13% APY. Now, that's not typical. More typical is 8%. But we've got some really good yields for USDC that double your high yield savings accounts. And they also didn't have any systems in place to be able to extract the extra juice out of those portfolios. They also had the problem of struggling to find coins before they explode. They felt like they were always late. They're playing this game where they're with their portfolio, they're oh, I see that coin starting to go up. So they jump into that one. And then that coin, it just stops going up. And then the coin that they were in starts going up. And they're oh, shoot. And they jump over that one. And they're oh, wait, now this one stopped. It's kind of like when you're in traffic and you're looking at a lane that's next to you. You're it's going fast. You go to get into it. And then you get in that lane and then it stops. And then the other one starts moving. You're son of a... We've all been there before. That's how crypto can feel sometimes, right? Now, the secret here is that you guys don't actually have access to a lot of the coins before they blow up, which is what we do teach in the program. I'm going to go into that a little bit more. But These individuals were also tired of paying high fees on centralized exchanges. They're tired of only using centralized exchanges. They're tired of like being burned by rug pulls if they did know how to get into the pre-market coins. So what do you guys honestly think would happen to your portfolio over the next 12 months? Right? Once your assets are protected from every angle, so a single hack, a black swan, or an exchange meltdown can't wipe you out completely. Once your portfolio is structured to grow aggressively, but still safely with clear rules for risk and position sizing, and once your capital is deployed to earn proven yield and strategic plays that start compounding immediately, all with real experts guiding you step by step so you never have to guess. Just eliminate the guesswork, guys. Now, you're not just hoping to get lucky. You're not relying on timing the top. You're not praying for a moonshot. You're maximizing your potential with a safety net. At first, it might look modest. Your capital's repositioned, small daily, yields start stacking, and the system quietly starts to lock itself into place, right? This isn't luck. It's the beginning of real repeatable wealth creation. You're entering higher upside positions with total confidence because you're backed by deep research and a team watching your back. Right now, you more than likely don't have your own research team at your disposal. That's typically only allocated for like big teams and hedge funds. We have a research team that you can tap into. We pay them so that you don't have to. Well, I guess you still pay us, but you know what I mean? You don't pay their salaries. So the asymmetric bet will start to pay off the minute you start doing things slowly. And then all at once, it accelerates. Your yield funds, your new plays, your asymmetric bets finally start to pay off. Your capital starts building momentum on its own. And that's what happens when you play the game like a smart investor, not just an idle hodler. So I want to go back to this, and I want you guys to ask yourself right now, am I operating like a smart investor or an idle hodler? Throw a comment in the chat if you're operating as an idle hodler right now. No judgment. That's the thing. Like, that's okay. But that's what I was doing at one point in time as well. We were all there. So right now, with the way your portfolio is set up right now, would you call it a machine built for generational wealth? Or is it just an hodl and hope strategy, hodl and hope strategy, waiting years for maybe that 5x outcome? You might understand the tech and the opportunity here, but if you want to truly get to the next level where your crypto is not just safer and earning more, but actually set up to quietly change your entire family's trajectory, you need more than just hodling and a prayer. If this sounds like you, then I'm very excited to announce, for the very first time ever, our brand new offer. I don't know if you guys can hear me beating on my desk, but I'm making like a drum roll noise. The Altcoin Pro Accelerator Program. Something that Nick has told me the Bull Runners community has been asking for 5 years now, right? We previously used to do it about 3 years ago. Actually, we were doing this just like a year and a half ago, like last year, actually. But we stopped to do the Altcoin Pro University program so we could build that up and help everybody to the maximum amount possible. And now we want to bring that to the Altcoin Pro community. So we've been honing and practicing our skills for like doing this one-on-one coaching service for 3 years now, since 2021. And then I guess 2024. Oh my gosh. Holy cow. 4 years. And then we took a break for a year to do Altcoin Pro University. And now we're picking it back up, baby. So I hope you guys are fired up and as excited as I am. Okay. So who is this built for? This is built for smart investors that are interested in paying for speed, structure, and peace of mind. That's what high-level support is for: speed, structure, and peace of mind. We built this program for busy professionals that already have established portfolios. Individuals who maybe have been buying up a little bit of crypto year over year, maybe dollar cost averaging, until eventually something happened. Something felt different about that portfolio. It might have become a little bit larger than you were comfortable with, leaving it up to chance. And now you need a plan. Well, I was just buying some here and there, 5K here, 10K there. I was just buying a little bit. And then all of a sudden it became this large portfolio that like I don't know what to do with it. It's now more than I'm comfortable with holding without a plan, and I need guidance. I've talked to so many people in that exact position. This is for you. It's for people that are tired of trying to figure it out alone on YouTube or Twitter. It's for people overwhelmed with DeFi, wallets, or security best practices. It's for people that have been burned by past investments or scams and are ready to rebuild with clarity and safety. It's for people that are feeling the fear of missing out and they're afraid to take action without a plan. It's for people that are sitting on idle coins with no real strategy and they want to squeeze all the juice out of this once in a lifetime opportunity that crypto is presenting to us all. So the Altcoin Pro Accelerator program is a 16-week one-to-one private mentorship where we help you build your entire crypto wealth system from the ground up. I need some water for a second. I've been running on no water for a while now. So I appreciate you guys hanging out with me while I drink this water for a second. Don't mean to build up any, All right, cool. I needed that. All right. So we help you build up your entire crypto wealth system. And we do that by leveraging our SGS framework. Okay. We help you set up your wallet system and security plan so you sleep easy, knowing hacks and freezes can't take you out completely. We help you architect your portfolio across stable plays, high upside gems, and safe yield customized to your goals. And plug you into insider research, teach you how to claim airdrops, earn yield through our DeFi strategies, and find low market cap coins in the pre-market before they explode so you're always one step ahead, never guessing. And we're with you every step of the way with direct one-on-one access to myself, Nick, Yoni, and our entire team of crypto researchers and mentors. The SGS system is built on 3 acceleration pillars. The first one is all about security. So it stands for secure. This is our ironclad portfolio protocol. It's where we have a custom built wallet structure specifically for you, diagrammed across exchanges and hot cold wallets based on your risk tolerance and access needs. We'll develop the clear max loss threshold plan specifically that you set on your own, right? We just go through the questioning system with Socratic questions to make sure that you get there. So you know exactly what's exposed and what's not at every layer of your system. We create the portfolio diversification blueprint so you can create an intentionally diversified and adaptable portfolio that can weather the storm of any market condition. Our ironclad portfolio protocol is inspired by time-tested portfolio principles and adapted for the realities of crypto. The ironclad portfolio protocol helps you build a resilient portfolio that's secure against volatility, inflation, black swan events, and the risks that are unique to this market. Now, we go beyond basic just diversification with this. You'll learn how to structure custom percentage allocations across stable assets, high upside plays, and on-chain strategies, all while keeping your crypto safe from scams, hacks, frozen exchanges, and centralized failure points. This is your foundation for stress-free investing, a portfolio designed not just to survive chaos, but to maintain control, preserve capital, and give you the true financial sovereignty no matter what the market throws your way. I want to double click on that real quick. This is about building your foundation, guys. This is the most important part of the entire system, the entire SGS system. This is the most important part. Why? Because just like if you build a house on sand, then the foundation will crack and it will crumble over time, and your house that you spent so much money to build is now gone. That same exact thing can happen in the crypto world. It's just not a physical house, so you can't see it. Now, the second pillar is the passive yield engine protocol. This is where we start to grow your protocol or your portfolio, right? Now, what we showed in the slides previously is, and in today, is only about 3% of what you actually could do in DeFi, right? There are advanced strategies that can supercharge your portfolio in any market condition, but we can't possibly cover all that in 90 minutes. Strategies like our ladder in yield strategy, ladder out yield strategy, corrective breakdown yield strategy, pump fake yield strategy. There's a bunch of different strategies that are implemented, okay? In this section here is where we'll start to like do the initial yield deployment, which is where we start with identifying the low hanging fruit of the portfolio. And that will allow us to squeeze an extra like 5 to 10% APY boost to your portfolio. Okay. And then from there, we'll start to go over some of the DeFi strategies that you can be using for any market condition. You'll learn our proprietary DeFi strategies, like I was just saying before, that leverage yield farming and lending to take your yield engine to the next level. And then we help you start to create some automation around these systems so that we can help you with compounding gains automatically, or even exit your liquidity pools on autopilot so your money works while you live your life. Okay. This is not just passive income. It's engineered compounding cash flow customized for you. Now, the third pillar is the pre-market positioning protocol. And this is where we scale your portfolio, right? So it starts with security, and then we start to grow. And then we take the earnings from the APY that we're getting, right? And then you can throw that into more high risk plays so that you can get into the scaling position. So that now you don't have to take your XRP or your Solana or your Bitcoin and sell it into high risk plays. You could just take the money that you've been earning from this yield that is you weren't going to have anyways, and then you can throw that into these low market cap coins that have the potential to 5, 10x, 100x in value. Okay, cool. That's the pre-market positioning protocol, where you get direct guidance on how to access the pre-markets, detailed support on how to be safe, and tested strategies for managing risk to reward, where you learn some strategies like our house money strategy and the moonbag strategy. And here's how it works. Okay, you'll get private one-on-one calls with our expert team over 4 months, but you get an extra month for getting into the legacy pricing with us, to where we help you with building out your entire portfolio. You get direct private access to our C-suite team, myself, Nick, Yoni, and our coaches. So your questions are answered in real time, not by some junior support rep. You get the weekly group coaching calls. Go to that here, so that we can actually jump on and we can all work together as a session to be able to learn and grow together. You guys can ask your questions on these calls. And you also get access to the all new Altcoin Pro Accelerator program module, right? So this is not available for Altcoin Pro University clients. This is going to include time-tested portfolio strategies. This is going to include how to like create strategies around the pre-market positioning protocol so you can thrive in the pre-markets. It's going to include our proprietary DeFi yield farming strategies that will allow you to maximize your yield while utilizing impermanent loss to your advantage, making it your ally and not your enemy. And then you're also going to get full access to Altcoin Pro University for the duration of your program time. Which is our self-paced crypto A to Z program with 150 plus lessons. And you're going to get unlimited credits in your account instead of getting one every month, like what would typically be in Altcoin Pro University. You're also going to learn our airdrop systems and strategies. You're going to learn our proprietary high yield DeFi liquidity providing strategies, as I mentioned before, and you'll get personalized portfolio reviews and audits. Okay, cool. Then you get access to our research team. And then this is some of the individuals that you'll have in your corner, right? You guys already know Ryan Huggins. He'll be in your corner. We got DeFi Mo, who you might not be fully aware of yet. We got Paul Iavicoli, which that wasn't spelled right, but we got Paul Iavicoli, who's our technical analysis specialist. You guys already know him. And we got Solj, who you guys also might not know unless you've been in Altcoin Pro University. DeFi Mo and Solj have been just absolute titans with us in the back end Altcoin Pro University. They've been with us since the start. And I mean, if you've loved them in APU, just like put a 1 in the chat. They've been absolutely phenomenal. I'm very grateful to have them with us. And then you also get access to our entire C-suite team, myself, Nick, and Yoni. Now, this is a 16-week accelerator program. So you'll get private one-on-one calls for that entire duration. Okay. So that we can help you with implementing the SGS framework. So what does this timeline really look like? So week 1 would be your onboarding plus custom implementation plan. Week 2 would be like your wallet security system setup. Week 3 would be like an initial portfolio build out. Week 4 is your first DeFi yield position. We start off a little bit easier, then we start to maximize some of those opportunities. Then month 2 might be implementing our liquidity providing strategies. Month 3, scaling and advancing into like actually going into the pre-market positioning protocols after we built up some capital from the liquidity pool strategies. And then month 4 is where we take everything together and we put it into like a fully dialed in system that you have, that you can graduate from and know exactly how to implement it on your own. Okay. Beautiful. So to recap real quick. All right. So you get the custom ironclad crypto portfolio build out, passive yield engine and deployment plan, personalized pre-market positioning plan, direct C-suite access to our team, plus our Altcoin Pro research team and coaches, weekly group consulting calls, and live Q&As that are only available to the Accelerator program clients. You also then get access to all of the calls in the university as well. You get access to our 150 lesson university curriculum, which is crypto A to Z. You get access to our airdrop systems and strategies, which we didn't even get to talk about airdrops on this, but that's a whole other side of things. You get access to our high yield liquidity strategies, our portfolio insight sessions, plus strategy feedback, DeFi and swing trading courses, proprietary DeFi tracking systems, and our 16-week one-to-one accelerator calls. Is that we're there holding your hand through the entire process, the entire time. Having a world-class plan means nothing if you're left alone to figure it out. Okay? So I'm gonna skip through this. I'm gonna ask you guys, like, how much would you say something like this should be worth? You have to type it out. Just like think in your head, right? How much would you say something like this should be worth? When we decided to open this up, we were actually looking at pricing it at about $32,000. And honestly, that's what people were telling us to charge for it, right? With the outcomes that we've been driving for individuals over the last like 3 to 4 years, this is dirt cheap to the right person. So let's just say we did charge $32,000. What if all of our program did was set up a bulletproof portfolio that protects you against everything that you've worked so hard for? One hack, one exchange blow up, or one bear market never wipes out years of your life. Would the clarity, the protection, the peace of mind be worth the price of admission? And if all it did was show you exactly how to put your money to work, so it's compounding every day and positions you for plays that could multiply your net worth in a way most investors will never experience, would that be worth it? And would knowing your crypto isn't just sitting there, but actively building wealth on autopilot finally give you the edge you've been looking for? Would that be worth it? And if all it did was give you the direct line into the same private research and early narratives we use to position for pre-market plays, low caps, and 5 to 6 figure airdrops where the crowd ever gets there, would that be worth it? Would knowing what to look for, when to act, and more importantly, when not to act, finally give you the edge you've been chasing? Would it be worth $32,000? Because of what this unlocks, the protection for daily portfolio growth, the life-changing upside. For all that, $32K should be a drop in the bucket to the right person. But I'll tell you that we're not setting the investment at $32,000. It won't even be $25,000. And to be honest with you, everyone was telling us that we should not go below $20,000 for this. But we ran the numbers and we wanted to find a price point that is accessible for serious investors while being priced high enough so that we know that we could afford to provide the level of support that we know is needed. So for right now, for you guys, it won't even be $15,000. Just for bull runners on this event, the investment to access Altcoin Pro Accelerator program is at $14,800 for action takers. But wait, you don't need to drop the $14,800 right now. We don't want you to rush into decisions right now. We don't want you to just spend 14 grand on the spot. Now, to apply, you'll submit a $1,000 fully refundable deposit. Our team's going to send the link in the chat here shortly. Now, why the deposit, you might ask yourself? You're not buying today, right? You're applying today. This is a 100% refundable deposit to secure your spot and start the fit check press to like see if it's even a good fit. This deposit shows us that you're serious. And if it turns out we're not a fit to work together, then you'll get every dollar back. We only want to work with people who are actually believe that we can help them. We want to work with people that are coachable, aligned, and are ready to do the work. And I want the one-to-one coaching, I want to find the people that can really maximize this opportunity and then minimize their downside. So serious results start with serious intent. That's what this deposit represents. I do want to be honest with you guys. The deposit does not guarantee acceptance. We'll review your goals, your portfolio. We'll see if it's a good fit. And if it's a yes, an Altcoin Pro specialist will then send you a payment link that has a limit of 30 transactions because there's only 30 spots that are available for this. Okay. We are closing this entire thing once we reach 30 applicants or 30 people that we say yes to. We can't handle more than 30 people right now. And I'm not willing to sell more spots than that to compromise on the integrity of the coaching experience. So we're limiting it at only 30 people that can join us. Okay. Now, if let's say you move forward with the deposit and it's a no, we'll just return your deposit. No questions asked. Okay. Cool. All right. Yeah. Have you posted the link? All right. Cool. Go ahead and post that link and then go ahead and pin that for everybody so that they can see that. Cool. All right, guys. So on Monday, July 28th, if this is something that you guys are serious about, that you're interested in, keep in mind that on July 28th, the investment will go up to $20,000. Also, keep in mind that while you are applying, if you're not one of the first 30 people that applies and we accept all 30 people to move forward, then, and you're number 31 that applied, you would have to be added to the wait list. We're serious. We're not accepting more than 30 people. We refuse to. We won't compromise on the integrity of the coaching experience. The team actually yelled at me for that. They were like, I think we could do 40. I'm like, no, I'm not willing to risk it. We're doing 30. Got a lot of pushback there, but we move forward with 30 because I don't want to compromise anything on you guys. Your trust is too important for us. So if you did apply and you're applicant number 31, for an example, and the first 30 people all get accepted, you'd have to be added to the wait list. Okay. So please make sure to submit your deposit today to lock in the $14,000 800 rate before it is completely gone. And there's a couple bonuses as well, though. Not only do you get the you get the extra 30 days. So instead of like the 4 months, you get the 5 months. So you get the extra 30 days of access to the one-on-one private calls. You get the live weekly group calls. You get the portfolio audits. You get the strategy refinement. All of that as an extra 30 days for a bonus for getting started with the legacy pricing. Okay. You also get the live weekly group sessions with Nick. So Nick's going to be jumping on once a week with only the accelerator program clients, where you're going to get live market analysis. You're going to be able to ask him your burning questions. You're going to see how Nick is structuring his own portfolio. You'll be able to get insights on his trading strategies. Okay. So to sum it all up, right? We're going to lock down your portfolio so nothing on the outside hacks, frozen exchanges like market crashes can wipe you out. We're going to get your capital deployed the right way, earning daily, compounding automatically, so it's not just sitting there collecting dust. And we're going to put you in a position for the kinds of pre-market moves, low cap and like airdrop plays that you can actually change what your balance looks like in a year, not a decade. And you'll have every piece dialed: the structure to keep you safe, the systems to grow your money faster, and the private research and guidance to make sure you're always a step ahead without second guessing every move. It's how you build serious wealth in this space, with speed, with protection, with a team that's been doing this long before the hype, standing right behind you the entire way. So here's what to do. Go ahead and click that pinned link. Click apply now. When you go to that link, submit your $1,000 refundable deposit. You'll get redirected to a confirmation page, and we can contact you today about that. Okay. Cool. All right, here you go. So go ahead, scan the QR code. We have it here now as well for convenience. It'll take you directly to that page. Again, if you're not a fit, then your deposit will instantly just go back to you. If you are a fit, we'll contact you to clear up the rest of the investment and get your onboarding call booked in so we can get started as soon as possible. If you're on the fence and having a difficult time with making a decision, I want you to know that I've been there. But I wanted to give you some tools that I typically will utilize when I'm trying to work through difficult decisions, which I usually like to future pace myself and look at the extremes of both decisions, right? One, I'll ask myself the question, what does my life look like in 5 years if I move forward with this? The next question I'll ask is, what could life look like in 5 years if I don't move forward with this? Right? It's a very like polarizing answer that will give your thoughts some clarity to like think through the situation effectively. Now, if you truly believe that you'll be in a better position with us as opposed to going at it alone, then your maximum downside is $14,800, right? If you decide to go at it alone, but you are in a financial position where this makes sense for you, then what does that maximum downside really look like? And to be honest with you guys, I don't really mean this as like a scare tactic. This is said with 100% good intentions. Just I've been coaching people in crypto for so long that I've just seen it happen so many times. So it's important for you guys to be aware of. Like, crypto is here to bring sovereign ownership of digital money for the first time in history, right? But sovereign ownership means that sovereign responsibility that we talked about before. So the worst case scenario in the world for this in 5 years is you could lose every dime that you put into your crypto portfolio. If you don't have a secure system in place that's predictable, that you trust, that you can rely on. So what's the potential upside? Let's future pace again. Let's say you have a $100,000 portfolio for easy math. In 1 year timeline, you will have needed to make at least like a 15% return in 1 year for that investment to really make sense for you, right? But let me ask you a question. Are you in crypto for 1 year, or are you in crypto for life? If you do think that we can help you make 15% back in a year, you've got the rest of your life ahead of you with the new knowledge that you've learned from having a dedicated research team in your back corner that'll answer every question that you could possibly have. That makes a big difference. Okay. If this is something that makes financial sense for you, please do yourself a favor. Learn how to navigate these markets with intention instead of just winging it. Winging it in crypto is a dangerous position to be in. That's everything that I have for you guys. I appreciate you guys showing up here intentionally and listening. Been seeing your comments fly through the entire night. I know you guys have been paying attention, and I don't take it for granted. I know it was a longer session, but we had a lot of information to share with you. I hope it was helpful, and we'll still see you tomorrow. We've got the session where we're going to be talking about like the risk side of things a little bit more in detail. Yoni's going to be going over the 11 laws of getting into a DeFi liquidity pool to make sure that you're aware of. So we still got a ton of value coming your way on the next session. If this is not something that you guys can afford, that's totally okay. It's not for everybody. I don't want you guys to think that, we think anything less, right? This is why we built the university program first, right? If you want to join the university program, you can still do that as well for the $97 a month. And we even have a 14-day money back guarantee to where if that isn't something that you thought was a good decision, then we'll actually send you your money right back. Okay. So I appreciate you guys showing up. We're going to leave this on the screen for a little bit longer for anybody to scan this. We've also got the link. But yeah, that's pretty much all that I have.